The global oil crisis and interest rate hikes are burying us right now. But what if I told you the most dangerous place is actually where you can make the most money? Has the smart money, the wealth of the rich, already moved? Is the world truly willing to let its economy crash just to raise interest rates for the US? The longer the US and Iran fight, the more money the US seems to make. With a crash this severe in 2026, do you still think this has nothing to do with you? We've made just about enough money from the Europeans, and it's time to move to the next stop. Everyone watching this, have you been working hard to make money since the pandemic? Have you made enough yet? Are you ready to hand over all your hard-earned money? Many countries around the world have already announced that even if the economy crashes this time, they will raise interest rates once again. The first one was Japan raising rates. Now Australia couldn't hold on and has hiked their rates too. Next up will be other Asian countries and then Europe. One after another, they will obediently line up to raise interest rates on behalf of the United States. They will push down their own stock markets, real estate markets, and all of their assets. They are completely knocking them down and turning them into cash, effectively sacrificing everyone's money. So for those still laughing at the US and Iran fighting, can you still laugh now? Hello everyone and welcome back to Stewardship Finance Academy. Did you also laugh a while ago, thinking war was just child's play? You know, just the Iranian boss coming out for a meeting and then getting bombed out of existence? You might have thought, all right, the boss is dead. What's left to fight about? Back in the day, when the bosses of Iraq and Libya were taken out, the wars ended. But what about this time? Not only did this fight not stop, it actually got fiercer. Why? Because if the US had ever studied the classic strategies of asymmetric warfare, they wouldn't have done it this way. Think about the ancient Ming cult from Persia, which happens to be today's Iran. At that time, they had many branches and divisions, completely fragmented. Orthodox forces thought it was simple. To catch the bandits, first catch the ringleader. They believed if they killed the leader, the entire group would be destroyed. But the result? After the leader died, they didn't disband. Instead, they gathered all their followers together, shared a bitter hatred of their enemy, chose a new leader, and fought back even harder. Iran today is exactly the same. Their boss wasn't just a president. He was a spiritual belief, a religious leader. Simply put, he was the person who helps them get a ticket to heaven now that he is dead in the eyes of his people. He was sacrificed like a martyr, making them even more united. I recently spoke with a political expert, and he pointed out that this leader was already in his 80s. He probably felt he didn't have much time left, and wanted to take this opportunity to sacrifice himself to go down in history. Although it sounds like a conspiracy theory, we are only looking at the results. Not only were internal traitors rooted out, but this war also turned into a brutal guerrilla war. The cost of an Iranian drone is only a little over 20,000 US dollars. When they fired 2,000 of them, it only cost about $40 million. But what about the anti-aircraft missiles the US uses to intercept these drones? Just one costs 4 million US dollars. What is 4 million multiplied by 2,000? That's $8 billion. So Iran can keep wearing the US down and see who burns through their money first. Hearing this, do you think the US will end up suffering a massive loss? Absolutely not. In the eyes of us businessmen and investors, who wins and who loses this war on the battlefield is fundamentally unimportant. Despite everything I just said, I am not talking about politics at all. Instead, I am calculating an account. Even though the US spends a massive amount of money in this war, they are spending it on their own domestic arms dealers. Simply put, it's just moving money from the left hand to the right hand. It's merely transferring the taxes paid by Americans from the government into the wallets of the military-industrial complex. Frankly speaking, it's all being spent on their own people. The current military-industrial complex is the government's biggest financial backer. Midterm elections are coming up. If they don't give the backers some money, how can they get elected? And the key point is this. As long as the money spent on this war allows American capitalists to scrape back even more money from the rest of the world, wouldn't this war be worth it? Many people say that Iran has now blocked 20% of the world's oil exports. Oil prices skyrocketing will trigger global inflation. Everyone's cost of doing business has become more expensive, which will inevitably cause the global economy to crash. During the Russia-Ukraine war, the US directly got involved and blew up Europe's gas pipelines. Oil prices directly skyrocketed by 70%. But were they ever afraid? No, the US dollar at the time actually surged by 28%. Simply put, the world's money was actually flowing straight into the United States. When the Russia-Ukraine war broke out, US stocks did indeed plummet at first, but they rebounded shortly after. In fact, the longer Russia and Ukraine fought, the longer US stocks rose. In other words, the longer each war drags on. It superficially looks detrimental to the US, but in reality, the US earns back even more money. Why is that? The US government says they want to end the war at the appropriate time. So what is considered the appropriate time? Is it waiting for Iran to surrender, or waiting for the US to win? Or is it waiting until all the money that can be harvested has been harvested? These are things that are already happening right now in 2026. You can pretend not to see it because the bigger picture cannot be changed. But you can also choose to save yourself, and even in every crisis, make the most money of your life, just like Warren Buffett. What will you choose? If you have the means and don't want to live with regret, you need to know how to navigate this exact market. That is exactly why you need to join the SFA Free Stock Investment Masterclass. The link is right down in the description, and it will show you exactly how to position yourself during this exact crisis. First of all, has a global oil crisis like this happened before? You will find that today is playing out exactly the same as 1980. So if today we are replicating the script from back then, the US economy should directly crash, right? Let's look back. At that time, Iran and Iraq, two countries relying on oil, bombed each other's oil fields. As a result, the world's oil supply instantly diminished, and oil prices immediately tripled. What kind of concept is this? As long as the business you run requires oil, your costs directly skyrocketed by 3 times. In other words, your profits directly decreased by 3 times. And back then, US oil relied heavily on imports. It all had to be bought back from other countries. So when oil went up, the cost of doing business in the US went up, and merchants had to constantly raise prices. As a result, US consumer prices skyrocketed by 14%. Simply put, things sold in the US became more expensive, and money became worthless. If things continued this way, the US dollar would turn into waste paper. So the Federal Reserve at that time was originally cutting interest rates to stimulate the economy. But after this war started, in order to suppress inflation, the Federal Reserve not only stopped cutting rates, they actually pulled interest rates directly up to 20% within just 2 months. Imagine that today. If you borrow $1 million to buy property or run a business, a year later, you have to pay the bank back $1.2 million. If you can't make that $200,000 in profit, just wait for bankruptcy. With usury rates like that, who would dare borrow money to buy property, stocks, or gold? Even with hard-earned investments, housing prices might not necessarily rise by 20%. But by doing absolutely nothing and leaving cash in the bank, you could earn a guaranteed 20%. Because of this, countless people started selling stocks, properties, and businesses. Basically, anything that could be converted to cash was sold off and deposited in the bank. Asset prices completely crashed, especially gold and silver, because sitting in a vault, gold and silver don't make money and yield absolutely no interest. So gold and silver at that time plummeted by 60 to 70%. What's more terrifying is that they didn't just drop for a few days and bounce back once the war was over. Instead, starting from that moment, they entered a 20-year super bear market. If your mom bought you some gold in 1984, your future wedding, 20 years later when you grew up, that gold still hadn't broken even. So history tells us that when an oil crisis occurs and the whole world lacks oil, prices will skyrocket. It causes inflation to spiral out of control, forcing the whole world, including the US, to raise interest rates. In the end, nobody invests, nobody does business, and global assets crash. Isn't the situation right now in 2026 exactly the same? Middle Eastern oil can't get out, oil prices are skyrocketing, and this will detonate massive inflation. So following the script from back then, the whole world, including the US, will need to raise interest rates and crash themselves, right? Actually, no. In the past, an oil crisis could crash the US because the US needed to buy oil from the Middle East. As long as the Middle East cut off their oil, the US was done for. But something massive has changed now. The US itself has gone from being an oil buyer to a massive oil seller. Do you know how much oil the US can produce every day now? 12.9 million barrels. Today's US is already the world's largest oil exporter. So what does this mean for us? Even though the US has become an oil seller, global oil prices have skyrocketed by 85% this year. The domestic oil sellers in the US see that by selling oil to other countries, they can get $100 a barrel. So why would they sell it to their own Americans for $80? Therefore, when global oil prices rise, domestic oil prices in the US rise right along with them. US oil selling companies can simply raise their prices to sell to the desperate global market. Since this is the case, does the US have no choice but to obediently raise interest rates and crash themselves like in 1980? Here's the most crucial, exciting part. When global oil prices are skyrocketing, the US government can actually issue an order to restrict oil exports starting today. Think about it. The global surge in oil prices is because the Middle East cut off oil, causing a worldwide shortage. If the US continues to ship its domestic oil out to Europe and Asia, the US will end up lacking oil just like them. But as long as they don't allow US oil to be sold abroad and keep it for domestic use, the US will have an endless supply. And then the price of their own domestic oil will be aggressively suppressed. But wait, wouldn't the US companies selling oil be unable to make money? Everyone in the US can print money. After printing money, they can distribute it to these oil companies through subsidies and tax cuts. When money couldn't be made during the pandemic, didn't they print and distribute trillions? Also, do you know how much oil reserve the US has hoarded in its own warehouses? Over 400 million barrels? Even if the US completely stops producing oil right now, just using up this hoarded oil would sustain them for 200 days. So if US oil prices rise too fiercely, the government can directly take out these oil reserves and dump them onto the market to beat down domestic prices. That is to say, even if they fight with Iran for another 200 days and oil prices rise for another 200 days, the US can handle it perfectly fine. The US is completely unafraid of this war dragging on. In 2022, when oil prices surged due to the Russia-Ukraine war, the US tried doing exactly this. So, step 1. The US restricts oil exports or releases reserves, keeping oil for domestic use, so US prices remain lower than the rest of the world. And then, think about the Russia-Ukraine war. Is it over? Actually, it's not. Which means Europe's oil is still cut off. Why did the US dollar instantly surge as soon as the Russia-Ukraine war broke out? Why did countless people transfer their money to the United States? It's because Europe had no oil, and industry, transportation, and infrastructure all desperately need oil. The European economy simply couldn't develop. Meanwhile, the US had oil. They were heavily developing AI, and most importantly, they raised interest rates. Since there wasn't much to invest in within Europe, Europeans transferred their money straight to the US, and US stocks rose as a result. And what about right now? Iran has blocked Middle Eastern oil exports. So not only is Europe's oil cut off, now Asia's oil is cut off too. Hasn't the exact same script appeared again? Global inflation will skyrocket, and the global economy will deteriorate, except for the US, which has its own oil and sells oil. Its inflation can be suppressed. The economy will not suffer because of the lack of oil. So wouldn't European and Asian money flow directly into the US? This is the massive difference compared to 1980. In 1980, the US didn't have oil, so it had to raise interest rates to suppress inflation. Now the US has oil, while the rest of the world lacks it. So it is only the rest of the world that has to raise interest rates. The US itself can afford to keep rates steady or even cut them. So the first step for them is to create global inflation while keeping themselves free from it. The second step is to force the whole world to raise interest rates. Japan raised rates, Australia couldn't withstand the inflation and has raised rates. It will be South Korea, Europe, and Southeast Asia. They are already actively considering raising rates. If the whole world raises rates and your country doesn't follow suit, your country's capital will flow out to other nations. But if you do follow and raise rates, your domestic economy will crash. In the end, the world's money will still flow into the US. It's just like during the Russia-Ukraine war, you could choose to raise rates like Europe did. Then your country's interest rates become higher and companies don't dare to borrow money. Ordinary people don't dare to spend money. The economy deteriorates, stock markets fall, and assets are sold off at a massive discount. Your country's wealth ultimately flows over to the US. American capitalists then take the appreciated US dollar over to your country to bottom fish these cheaply sold assets. Or alternatively, you could choose to be like Japan and lower rates to 0%. Since borrowing costs in Japan were so low, the whole world borrowed money from Japan and invested it into the US. Ultimately, the Japanese yen's exchange rate collapsed, and the US dollar continued to surge. So regardless of whether your country raises or lowers interest rates, your domestic money will flow to the US, and your domestic assets will be sold at a severe discount. To put it simply, many people have a misconception taught by standard economics. They think if the US lowers its interest rates, the return on saving money in the US decreases, and people will transfer their money out. They think the US dollar will depreciate. But history proves that countless times when the US cut rates or printed money, the US dollar actually surged. Why? Because money always runs towards the safest place. When the global economy is bad, and only the US has oil to control domestic prices, the US economy will be relatively better than everywhere else. So when the world raises rates to fight inflation, the US can even cut rates, and the money will still run over to the US. Because of this, during the Russia-Ukraine war, US stocks plummeted at first, but later skyrocketed non-stop. Meanwhile, European and Japanese assets had to be sold off cheaply. After American capitalists made money in their domestic market, they used the appreciated dollar to bottom fish Europe and Japan. Now this exact script is playing out again, except the target for harvesting is aimed directly at Asia. The US is currently unafraid of this war dragging on. In fact, they want to drag it out. Only in this way, when the global economy crashes, will money flow back into the US. US domestic assets will skyrocket. They will cash out into appreciated dollars and bottom fish the world's cheaply sold assets. Over the past 2 years, we sold the profitable US stocks bought when the US was raising rates. Many people say we have always been bearish on the US, and indeed many problems exist there. But that is not why we sold our US stocks. Selling US stocks does not equal shorting US stocks. We then saw that Hong Kong stocks were preparing to enter a bull market. So we switched horses, moving to an asset that had been constantly undervalued. Then, after Hong Kong stocks, we felt it was running out of steam and hit our take profit level. Last year, We saw gold and silver enter a bull market. So we continued to switch horses. Now it's returned 3 or 4 times. This is the core strategy at Stewardship Finance Academy. Don't be greedy. Run when you've made enough, and shift your money onto the fastest running horse. This is exactly the kind of high-level strategy we teach in the SFA Free Stock Investment Masterclass. Make sure you click the link in the description to secure your spot today before it fills up. But this year, everything changed again. This is the moment I heavily focused on the US dollar and US stocks once more in over 3 years. Although US stocks have plummeted right now, just like when the Russia-Ukraine war first started, this will actually present a low-risk, high-return entry point. Don't misunderstand. Low risk doesn't mean the price has dropped low enough. It means it is the timing with the absolute highest win rate. How do we know this? Could it be that we just rely on news and financial reports to judge the situation? How the situation develops only helps us predict the general direction, but we don't have a crystal ball. Even if the general direction is right, you can still lose money. So we not only need to understand the macro environment, but we must also learn to strategize in conjunction with technical charts. Because only charts can clearly show the clues of the institutional capitalists' layouts. Since even Warren Buffett inevitably loses money sometimes, what we need to establish is an unbreakable defensive strategy. How exactly do we do that? In 2026, I'm revealing this completely improved investment system inside our masterclass. If you want to receive our exact strategies at the very first opportunity, you must take action. If you feel that investing is a skill you have to learn sooner or later, you need to hurry and register for the SFA Free Stock Investment Masterclass using the first link in the description. Some people might feel there's a contradiction here regarding 2022 and 2026. During the 2022 Russia-Ukraine war, the US blew up Europe's gas pipelines, and oil prices surged just like they are now. But didn't the US's own inflation also surge to 9.1%? Didn't the US ultimately raise rates 7 times? So on what grounds can they avoid raising rates this time while fighting Iran? If the US can restrict oil exports now, why didn't they do it in 2022? The answer is very simple. In 2022, the US personally blew up Europe's energy lifeline, and then turned around and told the Europeans, "Don't panic, I will sell you my oil." They wanted to earn the Europeans money. So how could they restrict oil exports then? They actually needed to increase them. From a political perspective, Europe and the US are allies. You can make money off your allies, but you can't let your allies die. Without oil, things would really go wrong. And the most important thing is that the 9.1% inflation in the US at the time was primarily not caused by oil prices. It was caused by the Federal Reserve printing too many US dollars during the pandemic. Within that 9.1% inflation, energy only contributed 2 to 3%. The rest was all due to rising rent and massive labor shortages. Even if oil hadn't gone up, the US would still have experienced inflation in 2022 and would have still needed to raise rates. Because of this, the US had no need at the time to restrict its domestic oil exports. When oil prices rose too fiercely, the most they did was tap into their oil reserves to gently suppress the price. They fundamentally didn't want oil prices to drop because they wanted to sell high. So what about now? Iran has blocked Middle Eastern oil exports. Who needs oil the most right now? Asia? So the US can choose to save them, or they can choose not to. Because of this, the US is entirely capable of restricting exports this time. And this is why the US raised rates in 2022, but now in 2026 they actually don't have to. But remember, restricting exports is not the same as banning exports. You can look at the situation right now. US oil is not only still being sold to Japan, South Korea, Singapore, Thailand, and Taiwan, but the price and quantity have literally doubled. In the first 2 months of this year, Asia bought US oil at 35 million barrels a month. Now it's straight up 60 million barrels. What's more brutal is the massive price markup. Before the war, US oil was already $5 to $6 more expensive than Middle Eastern oil. And now the premium has soared to $18, completely tripling. Trump directly stated that they are currently the world's largest oil producer. So when oil prices rise, they make an absolute fortune. They are having it both ways. They restrict a portion of exports to protect domestic prices while selling to Asia at staggering markups. The most important part of this strategy is breaking Asia's economy and then siphoning away Asian money. Then they can sell off their appreciated US assets, hold on to the strong US dollar, and go bottom fish Asia's cheaply sold assets. At the exact same time, the US still holds over 400 million barrels of oil reserves ready to be dumped to push down their domestic prices. Most importantly, when Asia buys US oil, it takes about 2 months for it to be shipped across the ocean. 2 months later, will this fight with Iran be over? I have no idea. But for these 2 months, Asian countries still have to wait, deplete their reserves, and pay cash up front for high-priced oil. And the US, they pay the money first, and they deliver the oil later. The cash is already in their hands. So what does Australia's rate hike have to do with you? Now you know. Australia's rate hike is merely a signal. It's the first domino to fall. Next, More countries will fall, panic will spread, and global capital will run straight to the US. Ultimately, your money and your assets will be sold off cheaply and transferred right into the hands of American capitalists. I am telling you all this today not to make you panic, but to help you prepare. Many people nowadays, the moment they earn some money, go and buy a car to make it easier for them to go out and have fun. That will directly slow down your pace of getting wealthy. The reason people are poor is not because they earn too little, but because they spend too much. The first sum of money you save is like a hen. Its purpose is to continuously lay eggs, turning the eggs into more hens to lay even more eggs. Many people, the moment they get their first hen, can't wait to eat it. If you don't know how to use the money you earn to generate more money, you will forever be on the road looking for hens. You might be asking, what should I rush to invest in to resist the financial crisis? Listen to me. The more it is a time of crisis like this, the more you absolutely cannot invest blindly. If you want to receive our exact defensive strategies at the first opportunity, you need to be in our network. Join the SFA Free Stock Investment Masterclass right now. The history of 1980 tells us that when oil prices surge, global inflation hits, and the interest rate hike cycle begins, nobody escapes unscathed. But this time, American capitalists can stand on the sidelines and watch. What about you? Are you going to be sitting at the table, or are you going to be on the menu? If you feel this story is worth being seen by more people, make sure you subscribe to Stewardship Finance Academy. We will continue digging deeper into these global shifts every single week. And don't forget to secure your spot in the SFA Free Stock Investment Masterclass using the link below. I sincerely wish all of you achieve financial freedom soon. See you in the next video.